Trading has closed on the 25th of August, 2022. Let's begin with our disclaimer, as we always do. We'll go over our calls and make some predictions for tomorrow. It's my trading plan for tomorrow. Why this moves on me after I adjust it, I'll never know. It's my trading plan for tomorrow, 26th of August, 2022. Remember, I can be completely wrong, and any trade you make should be at your own risk. Look for the pattern with the early high. Tends to be a rally day, tends to close near the high. That's what we got. Tomorrow should have the early low. I wasn't very impressed by yesterday's action. I said unless we gapped and promptly overtook yesterday's high, we should see lower prices. We gapped and promptly overtook the high, and that's what the bulls needed to do. This is what we said. Tomorrow's the early low. Let's go over the intraday patterns. Early on, MEJT said ultimately higher prices would print. They did. Later on, it gave an ultimate buy signal and a buy signal. They certainly worked, but the minimum targets printed immediately. Nothing requires the market to stop right at the minimum target. That's why it's a minimum. The important point is that MEJT should be used in conjunction with other systems, and now there's a standalone system. It did say if we dropped here it wouldn't stick. It did say we would do the rally. It didn't say we had to rally as much as we did. Well, let's look at some other things. Yesterday we had what I call a wall into the close. Unrestrained selling, get me out at any price, tends to be panicked by individual retail customers. And then we had a gap. This is a wall with gap pattern. This gap is an unstable pattern. It tends to fill, and the majority of time, certainly not every time, but the majority of time, this gap fills by Monday's open. And if that happens, which I'm not predicting one way or the other, if that happens, there's support under this low. We now have a wall into the close. These walls often are followed by gapping down, and futures are down as I'm recording this, so it certainly is possible we gap down. The idea here is you've had all day to overtake this high, couldn't do it till a lot of the professionals went home, and then the retail customers said, get me in long at any price. The market makers are forced to sell, and if they're forced to sell, they tend to get their money back pretty soon, and they do that by gapping down. I'm not going to claim it happens every time, but it happens often enough. If we do gap down, and that's an if, creates another unstable pattern, that gap tends to fill. As I'll discuss, I don't think this rally is over. So if we gap down, which isn't a given, but if we do, I think we're going to recover, go over this high, but that's a resistance area. So we have resistance right over the high at 4,200. Next Fibonacci resistance I have is about 4,205. That would be a 50% retrace of this whole drop. Of course, just because that's resistance, it doesn't mean it has to hold. That's just the next Fibonacci resistance area, 4,205. Well, so I'm counting the daily chart. We have 1, 2, 3. I think we're in the fourth wave. I think that's A. We've counted this as 5 waves down. We're making a B, and then there should be a wave C. Now, I'm not going to claim I know where this B is going to end. Could even go over here. It's could be an banded flat, you never know. But many times, the market's going to play ping pong between the 200-day moving average and the 50-day moving average. So what if this is A, and what if we stop at 42.05 for B, and what if C is equal to A? Well, you'd have what you normally have. You'd have Fibonacci ping pong between the 200-day and the 50-day moving average. You'd have A equal to C. You'd have a nice pattern. You couldn't go too much lower without overlapping one and killing my count, which is always possible. But if we get that pattern, which certainly isn't a given by any means, if we hit 42.05 and if we reverse strongly, it wouldn't be unreasonable for us to go down to this 50-day moving average, which now is just under 4,000. I can't count the fourth wave as complete here because that drop is a 5-wave structure. Let's focus in on what's going on here. Well, I now think it's possible to count this as A of 4. Certainly it's not a guaranteed count, but it's a reasonable one. And we have to see how to count this. Now we're making an ABC, but I can't make the fibs work. And even if I could, it doesn't have to be the end of B. It could be just A of B. But let's focus in just on these waves here. I mean, if that's A, and if that's B, and if C is equal to A, we get the same 42.05. It doesn't mean it has to stop there, but just means if we gap down, that's an if, I would expect us to recover, go over this high, and find resistance at 42.05. Doesn't mean we have to stop there, but if we do stop there and can't hold on to that gain, and particularly if before Friday's over we drop enough, that would create a very negative pattern. And if we drop enough to convince ourselves that this ABC is over, if that happens, I'd look for another, this is B at 42.05, which hasn't happened yet. Wave C could take us down to around 4,000 and reasonably quickly. So it's something to look out for. It's not something I'm personally willing to risk money on at this time. It's just making plans. But if that happens, I want to be alert to that possibility so we can capitalize on that. Well, Friday's pattern has the early low. It could still gap up. NASDAQ McClellan Oscillator and the Volatility Index now around Bollinger Band reversal buy signals. My count shows us in wave B of 4. It's possible to count waves 3 up in this B. I don't have good fibs, so I suspect the wave higher isn't over. If the count's right, which we don't know, we should finish wave B before too much longer, enter into wave C down, and often it resembles a recent wave A. I don't know how we'll open. The futures are down as I record this. The wall into the close often is followed by a gap down, and if we gap down, and then rally over today's high, reverse around 42.05 cash, and if we drop enough into the close, we create a very bearish pattern for Monday. It's a possible path. It's not a guaranteed one. I don't have to risk money on it now, but if it starts to play out that way, it should offer a very good risk-reward ratio with resistance around 42.05 and a possible target around 4,000. So we'll have to see if opportunity presents itself. Tomorrow has the early low, and that's today's call.